Welcome traders to this live webinar. My name is Chris. This is a webinar provided and hosted by Admiral Markets. Today we're going to take a look at the Forex, commodities, and stock indices. As always, first though, be aware that this webinar is shown to a global audience but may not be suitable for everyone. Please visit admiralmarketsglobal.com, select your country of residence, and contact the appropriate entity for more details. Also, please be aware that trading for exchange at global financial markets is considered high risk. Please seek the advice of an independent financial advisor for more information on that. This webinar is for informational and educational purposes only. By continuing watching this webinar, you agree with this disclaimer and you are aware of the risk involved when trading. All right, thanks for your attention on that. So, with no longer ado, let's take a look at what's going on in the financial markets. First, of course, last week, or this week, or I should say last Sunday, 2 days ago, there was a big political event in France, the presidential elections, of course, so as you probably followed. That has sparked the euro dollar to the upside. Euro gained based on the two candidates, that's Macron and Le Pen. And basically, I think it's connected to the optimism of the first candidate. Le Pen is looking for a referendum on the euro, the EU, excuse me. So that is not bullish for the euro. But Macron is showing a different side. He is in favor of the current arrangements. Is more of a centrist. So I think that the market reacted to that potential victory 2 weeks from now. But we'll know more next week, Sunday, 1.5 weeks from now. Regarding the calendar, it's always good to take a look. We can do that right now. You can see here, for instance, what's coming up regarding news events. It's always good to take a look and be aware of these things going on. It also could be a good idea to take a look at the market heat map. You can find both by looking at analytics, then going to calendar, then going to heat map, for instance. You'll find also analysis, technical wave. You'll find articles, and the educational part, you'll find webinars, for instance. Excuse me. And there's a lot of other things. For instance, platforms where you'll find MetaTrader 4 Supreme Edition. We'll show you some of those tools and indicators in just a second. Regarding the market movement, Mondays typically do not have a lot of volatility, but yesterday was perhaps a bit of a difference here. You can see the euro boosting to the upside, all above 1%. Euro New Zealand, Euro CAD, Euro Pound, all of them. Some had more volatility. The Euro CAD here you can see around 150 pips, the Euro Pound around 50 pips volatility. There was a substantial difference in terms of volatility, but not in terms of direction. All right. If you're new in this webinar by any chance, if you're joining for the first, second, third time, one of my webinars or another webinar, just feel free to reach out if anything I'm saying is perhaps confusing, not sure what I mean. Use the chat, ask a question, and reach out like that. Or if you like, you can even share a screenshot of your favorite setup, your favorite currency pair, a current open setup that you would like to discuss. Just sharing your analysis, feel free to share those screenshots and images, and we can take a look at that. All right, so one of the things I use, as you can see in this template, are Admiral Markets Keltner bands and Admiral Markets pivot points, among other things, and this mini terminal, which will soon probably appear in the left upper corner. And there it is. And basically, they help traders with identifying support and resistance. Keltner bands basically indicate, how far can price push before a bounce could occur. If price breaks through the Keltner, that could also indicate momentum. So it's a good spot to indicate reversals, but also when do breakouts occur. For instance, like here, for instance, you can see price was breaking through the Keltner, here. Those actually indicated an acceleration of the downside, at least for a while. Also, you can see that the Keltner bands sometimes indicate bounces. Here, failure to break. Here, failure to break, right? Here was a bounce. So it depends on the candlestick reactions to basically price. Um, if it's strong candles going through the Keltner, we're looking at a breakout. If there's hesitation, if there are wicks visible at the Keltner, then that could indicate a bounce. So Keltner indicating, strong support or resistance levels. The pivot points do the same. I use weekly pivot points to indicate the space that could kind of be used throughout the week. Very useful as well to understand how far has price pushed. Is it at a bouncing spot or breaking the resistance, for instance? So that has the same function. This mini terminal, among other things, is good for easy trade management, calculating the lot size based on your risk and based on the stop loss. That makes it a lot easier. You can enter all the data and participate directly. If you want, of course, be aware that if you're trading demo, you're not risking anything. Of course, if you have a live account, obviously you're risking real money. So that's just a few things. There are a lot of other things with the Keltner, Supreme Edition. You can see right here on the left, mini charts, order history, pivots, and the Keltner right there is one of them, all right, among other things. So we got into your dollar. It gapped up basically. Trading does not stop for the big banks during the weekend. It does for us, but the market continues actually non-stop. But there's a 48-hour break. During that break for us, price gapped up, as you can see here, and is challenging 109 resistance. So let's step back a bit and take a look at this weekly chart. And let's think a bit deeply about the market structure here. We've had basically in 2014 and 2015 for about 1 year a magnificent, serious, very sturdy bearish momentum, crashing from about 140 almost to parity, 105, right? So a 3,500 move within 1 year. For the euro dollar, that was a big move. Take a look at this monthly chart and you'll understand. That was this fall, right here. So that fall, in my opinion, is part of a bigger correction that's occurring like this. And the target I was already mentioning back here was the minus 272 target and the minus 61.8 target. Price crashed and broke through that first target. That second target is still open. And there is a chance that price might still reach that. All right, that's still open. Now, and potentially even an extension, even an extension to minus 100,000, minus 100 target, sorry. That minus 100 target is also the bouncing spot here, the support level, the bottom on the left, where I have the blue circle. So those are bearish targets for the euro dollar, but we have to also understand that this is the bigger structure. Cannot show more. But anyhow, basically, you can see that, let me move this a bit to the left. You can see that price was moving higher to low like this, right? So could eventually the euro dollar bounce back like it did here? Yes. I think that after this downtrend, there could be a reversal and price could revert back at least to test these bottoms, right? For instance. So what could happen is that price might finish this downtrend at the minus 61.8, perhaps even at the minus 100 target. That's a question mark. Then bounce and retest basically these bottoms like this. It would be at a sort of equilibrium point at that spot. And who knows, we'll have to see, of course, at that moment if price continues to even retest these tops like this. If it depends on two factors. How will price respond to support? And how will price move up when it does bounce, if it does bounce? In the Forex market, it's pretty simple. If price is testing support or resistance and it does not break, then it's a natural thing for price to start testing the other side. So for instance, if price is moving up and testing a resistance spot but fails, naturally it will start to decline to test the previous support. And whether it will bounce or break, we will soon, that depends on other things, market structure, and sometimes we don't know. So in this case, if price is testing the support levels but it fails to break, it could eventually bounce and then test the resistance. Resistance levels like 110, 120, 130, 140, maybe even higher, who knows. But that's very far from now. Will price get that high? I don't know. It could, hit these bottoms and then turn back down again. And we might get a, who knows, we get bigger triangle pattern, for instance, right? So that's something to be aware of. So for the moment, this last piece is possible, and then we have to be aware that price could bounce at 1 or 85, for instance. So looking back at the fall, we had a great fall here, and then we had a triangle, and that triangle broke to the downside, right here. But the breakout has not really pushed that far, and we're seeing another correction right here that has lasted pretty long. This correction, 20 weeks. This first correction, 82 weeks. All right, if we consider this candle right here to be the breakout, which is, I think, a pretty good moment for that breakout, that breakout didn't last too long. You can see about 650 pips, and then we get a bigger reversal. So this correction could still be a correction. This could still be part of a new push down. So if we let me take this line away. And let me connect the bottoms here like this and the tops like this. All right, so a week ago I was talking about a potential bounce at this support trend line. It did. The rally was even further than I expected. I thought it would go up to 108.30. It went up to 109. The reason why I thought 108.30 because of this head and shoulders potential right here. This left shoulder head, potential right shoulder, and that could have been a head and shoulders reversal pattern, a bounce, and then a break of that channel. That didn't happen. The French election news boosted it even more to the upside. So perhaps there could be a double top. Maybe, I don't know, let's see. Anyhow, in any case, here, 109.50 or 110 are resistance level. 110 because of the psychological level, and top of that channel. 109.50 is the R3. No, it's a bit higher. Okay, there is some fib target if I remember correctly at 109.50, and 109 is this top. So all of these three levels are potential bouncing spots, in my view. Now, if price breaks through 110, then it's basically breaking this channel to the upside. In that case, this whole channel might be different. For the moment, this is looking like a break, pullback, and more bearishness is expected, considering this break and this large triangle. But if price manages to break above 110, break above this channel, in that case, the whole market structure is changing. This could, in that case, be the base, the start of a bullish trend. The breakout could indicate the acceleration of momentum, and this whole thing could start to look bullish on a higher time frame. That hasn't happened for, well, basically since this last push-up. It was a choppy push. It looked like a rising wedge, but it was an uptrend at that spot. So basically, last time the euro dollar on a higher time frame really like this, 3 years ago. So it looks like, from my point of view, pretty critical. I mean, it's not a guarantee, of course, that a break of 110 will see necessarily a large push-up, but at this moment, I think there's a decent chance for that. If it does do something like this, and we get a triangle like that, then I would expect a follow-through. If price, however, stops at this zone, resistance zone, turns around, challenges the bottom again, the support level, then everything stays the same. I'm still bearish, basically. This is the first test, this is the second test, this is the third test of that channel, which basically means that there's a good chance of a bearish breakout when price retests this channel for the third time. So a bearish breakout at that moment is likely. All right, so a bearish breakout could occur the next time if it bounces. Looking at the 4-hour chart and 1-hour chart, okay, we kind of see the kind of a triangle pattern here, and we see the gap that is basically showing momentum in a way. So what I would expect is if price is able to push through 108.75 above the R2 and above the resistance of this mini triangle with a 1-hour or 4-hour candle that is sturdy, strong, good close near the high, something like this, for instance. All right, I would consider that a good breakout candle, and I would probably look for a small little retracement of this candle back down to 108.75, and that could be a good bouncing spot for one more push up to 109.50, perhaps 110. All right. Now the reason is because basically there's this space within that channel to the upside still. It is pretty close to the top of the channel, but considering the fact that it's making a sideways triangle like this, the market is definitely not moving lower. It's just kind of going sideways, trying to catch its breath. It's like a marathon runner that has, taking a slight little break, maybe running just a little bit less fast, right? And then ready for the next sprint. So the euro dollar, excuse me, is also ready, it seems, for the next sprint to the upside. Why? Because when looking at this 4-hour chart, you can clearly see an uptrend like this, higher highs and higher lows, a recent acceleration. This is going sideways. So from my perspective, it's ready for a bullish breakout. I'm just waiting for price candlestick patterns basically to confirm that breakout for that last push to the upside. Then price will get into a resistance zone, a key resistance zone, where I would expect a bearish bounce. That is something I will be keeping an eye on this daily chart. So if price makes this upside, I would look on a daily chart to look for some kind of pin bar like this. If I do see a pin bar, or if I see some bearish engulfing twins, or even if I see a bullish candle with a wick, but I see two of them in a row like this, all of those candlestick patterns, in my view, indicate a bearish bounce potential and a turnaround, a reversal. Whereas if I see a bullish candle like this and another bullish candle like that breaking through it, then in that case, my bearish trend is out of the window for the moment, and I'll be thinking about how to trade it to the upside. Excuse me. So I'll be looking for a correction. I'm not sure. It depends on how these bullish candles look like, to be honest. But yeah, I would probably be looking for a chart pattern on a lower time frame, 1-hour, 4-hour chart, and looking for continuation of that momentum. So, by the way, if you're interested in candlesticks and you think those have value to your trading, we talk about candlesticks a lot, and then it is also a big fan of price action, then I highly recommend a webinar that's taking place with Animal Markets with the founder, or the one who basically introduced Steve Neeson, introduced candlesticks to the Western world, basically. There's a special webinar next month, May 11, if I remember correctly, Thursday. I'll be the host, and Steve is going to be our guest, so I hope that you can join that webinar. It'll be great. I think there are going to be a lot of learning moments and lessons from that webinar regarding how to use candles, the basics of candles, but also, of course, more advanced stuff. We're talking about the one person who has used candlesticks now for decades. So if you're interested in candlesticks, this is a prime opportunity to capitalize on that opportunity of learning and join that webinar. The webinar is at 7 p.m. European time. So for you, Craig, that would be around 5 a.m., I guess. So it's a bit early. If I'm not mistaken, it's 10 hours difference. The GMT time is 5 p.m. But I do believe it will be recorded, and I think it will be available. But I'm not 100% sure. Yeah, that's true. And yeah, 2 a.m. would be annoying, but 5 a.m. is still doable. It's actually my normal time of getting up, so 5:30, it's acceptable in the end. Exactly. Earlier is a bit annoying. So it's still early, of course, but yeah, it's within reason maybe still. So sorry about that. So yeah, that's the euro dollar. That's what I'm expecting. What do you guys think, and girls? It's a bit of a tough spot, maybe. I mean, the euro dollar has been pretty choppy. Looking at this channel, of course, if price, we didn't talk about that yet. If price breaks through the bottom of this triangle, I would not be that interested in trading it, first of all. Excuse me. I would not be looking for a bearish break. I think that the reason is because I'm not expecting much of a downside momentum yet. I'm scared that price could still hit the R1 or even hit 108.25 and then just turn around. It is a triangle, but it could also easily still do this and then turn back up like that and just make it a flat, a sideways zone. So from that point of view, I don't want to trade the breakout. I don't think that is worth it. But if there are several candles like this pushing strongly, breaking through, let's say, these mini bottoms, and they keep, the candles are relatively large and strong. And primarily the candle closes are near the low. And then we get a bear flag like this. I would consider the next breakout, trading the next breakout, back to the pivot point. So if there is some momentum visible and then there's a mild correction to it, then that does change things. In that case, it could be worth trading kind of this space between R1 and the pivot point. So that would kind of change it. Or if price were doing this, for instance, today, small correction and then one more push, and then tomorrow, I don't know, there's an ABC zigzag, for instance, like this, that still might be worth considering looking for one more bounce down to this, for instance. Because in that case, we already had a break of R1. It's not as bullish as it is now in that case. So, it's difficult to go through all the scenarios. But in any case, if there's a bear flag, if there's momentum bear flag, that could be interesting for a follow through. So, Bernard, thanks. It's great to hear that. And Bernard also mentioned that the election results will have an impact, absolutely. I agree. Le Pen is euro weakness. Macron is euro strength. So that will definitely have its kind of its role at that time. Now that's still 9 trading days away from now. So what could happen is, for instance, price moves up, price moves down in those 9 days, and then bounces back up like this. But I mean, we don't know, but could be very reasonable, right? Then the elections, the second round of elections take place. So if Le Pen wins, indeed, the euro could do this, right? Gap down. If Macron would win, the euro could do this, for instance, and stay within this channel. So this is how price could move till that second round, and then after the green line, it indeed depends on who will win. And after that event has settled, has taken place, and things have calmed down again, we can reanalyze it. If price is still within this channel and has reached 110.50, for instance, it could still be this, right? Or perhaps there's so much momentum, we'll be looking for this. So, but that's something we'll see 2 weeks from now. All right. Pound USD, I was looking for a breakout candle. Anyone who considered this to be a breakout candle, I can imagine. So if you took that that trade, you're in that trade at the moment. Stop loss should be below this bottom and below 127.50. An entry could have been halfway that candle. The candle itself was about 53 pips. So about halfway is around 128, excuse me. So it's about break even at the moment, or minus 3 pips at this point, if an entry was taken around 128. Stop loss around 127.45 below this bottom, and targeting 129, 129.50, 130. That particular trade, I don't think there's anything wrong with it as yet. Price is going sideways. This is the 4th day, counting daily candles at least. So it should be fine still today and tomorrow. By tomorrow, I would definitely get out. But today, right now, it should still be fine. This bullish candle is still dominating the market, and I would expect price to make a last push up to this minus 61.8 target. So let's see if it does that today. 1 hour looks pretty good. It's the volatility is decreasing. Look at these Keltners, it's kind of squeezing. So if an hourly candle were to kind of push through it with a good close near the high like this, that could indicate a breakout. There could be maybe some retracement, but then the 4-hour follow through could occur. If price for whatever reason does break through 127.50, in that case, it's probably best to have, let me see which fib would be the best fib. It doesn't really matter that much, but then in that case, price could test the 50 fib at 127. So that is possible that price could bounce there. But if it breaks below the 50, in that case, there could be a failure to break this high. Normally, with so much momentum and such a strong oscillator, this high typically gets broken. So that's why I'm bullish. One of the reasons why I'm bullish, at least, is that this momentum is strong, and when you have so much strength pushing the price up, typically you get a break of the top, and you'll have the divergence appear. You'll get a higher high on price, but a lower high on the oscillator, so you get a divergence between the two, and that will potentially create some retracement. On the hourly chart, it's 50-50. Hourly chart, sometimes it's better to have double divergence, but seems to be the minimum. A single divergence is often the minimum before you get a reversal. Now there's no divergence at all. So it would be odd in a way for price to totally revert like that. It is possible, right? But it's not the most likely scenario. Because of the strong momentum and the lack of divergence, a break of the high typically occurs, and that occurs after price mostly respects the 23.6 or the 38.2 fib, max the 50. So that's a few reasons why I'm expecting continuation to the upside. Also the 4-hour chart, same like the hourly, no divergence between this top and this top. So with no divergence on the hourly or 4-hour, nor on the daily necessarily, I think that there's a green light for the uptrend here, and I think it's a good chance of at least breaking 129.04. And how far it will push is something we have to see. But it doesn't even have to break much higher. It could, but doesn't have to. A few pips break of this high already, or 1 pip break basically already meets the criteria of breaking the top. One of the things that I think is likely is a break of the top. But how much remains to be seen. Looking at fib targets, basically, I would say 129.30 or 130. Okay? Sorry if there are any sound problems at this moment. Does anyone else have sound problems? Besides Bernard. Bernard is saying that the sound is not so smooth. So I hope that it's getting better or is improving. Please let me know if anyone else has that. Okay, great. If there are any sound issues, please indeed use the chat and let me know. It's always useful for me. Maybe I'm talking too fast. Then, all right, I'm working at this moment, having this webinar here today, and trading from a different location than usual, not in Prague, but making a mini travel trip. So not having my usual internet, and that could maybe explain it. But Thursday I will be in a different spot. We're moving an hour further from here, and that should have better internet. So should be better on Thursday. So sorry for that. Dollar yen. Let's take a look at that. Dollar yen. As I said in yesterday's video, is testing the bottoms here on the left. So let's see how it responds to that. At the moment, a breakout to the upside, I think, seems pretty decent chance. The correction has been quite mild. Look at that. There has been a 3-wave. So if you like wave analysis and you see a 3-wave down like this, right? Or it could be a 3-wave down. You're not sure yet, but you're thinking about it because there's strong momentum here, an uptrend, I should say, and some momentum here with the gap. And you don't want to take it here because price is very close to that resistance level, right? You see furthermore a push down and then a choppy kind of rising wedge, which is typical for a wave B, and this is typical for a wave A. So this might be a wave C or a wave 3. It depends on if price will use support levels here to bounce. So when looking at candlesticks, what would give us the impression of a bounce? Right here. These engulfing twins, anyone looking at the charts and using waves, for instance, as support or resistance, might have taken that, because these engulfing twins indicate that this is most likely an ABC. Price has not pushed through the support, has not invalidated the support, not broken through it. And the engulfing twins is showing the reaction to it. So that could have been an interesting entry right there. Right? If you didn't catch this one, excuse me, no worries. It's just an example of using discretionary analysis to find occasionally some interesting setups, and this one is doing fine at the moment. Now, if you're not in that one, or the 4-hour chart, by the way, then a 4-hour candle like this could be also interesting right here. Now, at this moment, price is already retesting this resistance. So I think unless the 1-hour chart makes a pullback, perhaps down to 109.75, 109.95-ish, I think it could be better to wait. If it does make that pullback, it could be a good way to take another attempt to join this trend. For instance, if it makes an ABC zigzag here, correction like this, it could be a bouncing spot like that. So I might look for a pullback within this this bounce. Right now, I wouldn't be that interested. It's too close to a resistance again for me to take it. What I would be interested in is taking a look at this daily chart, and would have to see some engulfing twins like this today. Then I would look for small retracement back to 110.25 and look for continuation to the upside. So now it's not an interesting spot because it's getting close to yesterday's high and that strong resistance level or zone. If it makes a small dip today, it might still be interesting. Otherwise, if it doesn't do that, I would want to see a bullish positive candle and then look for retracement tomorrow for a follow through tomorrow or Thursday. Okay, so this dollar yen, not sure if this is the bouncing spot for a massive rally or still just a retracement further down to the 61.8. At this moment, I think both are basically possible. It all depends on how price will respond to this resistance zone here. If there is a breakout, then it could start an uptrend. It could. We'll keep an eye on that. If it bounces, I wouldn't be surprised if it breaks below the trend line and then moves down to the 61.8. So a pretty important zone. All right, gold. Let me renew this template quickly for you. There we go. Gold is, well, folks, very quickly, I don't know, of course, I don't want to repeat myself too much, but gold could be an interesting spot just because of the fact that when you look at this massive uptrend we had in the previous decade, price has already bounced off the 50 fib. So this could be bounce, pullback, continuation. At minimum, this could be an A, B, C. But who knows? Perhaps it's a 1, 2, 3, right? So both cases are bullish in my opinion. That would change if price manages to break through this support trend line. Until that moment, I'm bullish on on gold at least till 1462, which is the minus 272 target. But that is the first target. And it all depends on how price moves up higher, whether that is the first target or more is possible. So looking at this chart, we see a push up, retracement, and again a push up on the daily chart right here. So from my perspective, this is close to resistance, as you can see. So what could happen is maybe a bit of a retracement of this push up, and there's maybe some triangle formation, and then the break of that triangle could be very interesting. So I don't think that going along right here is the best moment. a very good moment was here. That's something that I discussed and also used myself. Fifth, sixth candle not breaking that low was one of the best moments because of this momentum. And right here, you can see the likelihood of this momentum being finished was high, and indeed we got the bounce. At this moment, price has made a potential 5-wave rally. Excuse me. So an ABC zigzag, I think, could occur at this moment. There is also, I think, slight divergence indeed between these tops. So, yeah, I would be more inclined to be on hold at the moment and be careful at this spot for trading either way. I would probably prefer one more correction lower before buying this gold. It would be good if it makes some kind of correction like this. We can put a fib from here to here. And it would be pleasant if it got down to the 50 fib at 1208. But either a bounce at 1208 or a breakout, in my opinion, could be interesting for upside. So I think that has potential. Regarding the indices, we see that S&P 500 is breaking up again. All right, we had some pretty large stall, 7 weeks. So let's see how it manages with this top. It is the 7th week, so from my perspective, I might be inclined to say that this high will not be broken, but I will rather be careful with that. Let's see how price action reacts. Regarding the DAX, it is breaking above the top and heading to these fib targets. It didn't have much retracement, so we can take away this fib. Pretty strong daily chart, daily candle yesterday. And I think considering the momentum that is visible here, I think that a bull flag pattern plus break would be interesting on the DAX. Why? Because of the strong momentum, there's a good chance that the high will get broken, just like the pound. So one of the cool things about waiting for momentum and a correction is that there's a good chance that that high will get broken. So that could be interesting for the DAX. Christian, you're talking about Fibonacci levels. If you're talking, are you talking about this tool? Is part of the MT4 platform. So you just have to click on Draw Fibonacci Retracement. Not that one. Okay. Are you talking about the Fibonacci sequence script, perhaps? Ah, no problem. I can send that to you through email. Let me share my email. 1 second. Please send me an email, and I'll send it to you. All right. So there we go. Anyone else who's interested in it, I'll show what it is in just a second. Feel free. I'm actually writing a guide this week on it. I thought it could be useful, a PDF. So I'll have that soon finished. So anyone interested in that, you can also feel free to write me an email. Okay? And the PDF explains it in more detail on paper with examples and stuff like that. I thought that could be useful because I'm a big fan of it. So I don't know. I had inspiration for it, so I thought I'll put it on paper. So if you're interested in that, yeah, you can send an email. Now, what is it? Basically, I don't use it for indices or commodities, but I guess it could be used. It's just that the script itself has been built for currency pairs. So But the principle could be, I think, used. We can take a look, maybe, I don't know, what do you want to look at? Pound yen? Let's take a look at pound yen. And let me just close the mini terminal for a second. And we need to find scripts, which I cannot find here. Good. And let's put it on the chart. So what you want to do, well, this is what the PDF will explain, but is find a top or bottom. I use the 144 EMA to see if it's a trend or an up. If it's trending, first of all, if it's an up or down trend. So pound yen 1 hour chart is an uptrend. So I would look at the bottom closest to the 144 EMA, but below it. Closest, but below. So I would put the script, I would click and drag to the candle low of the bottom right here and let go. I'll keep it on buy because I'm looking for an uptrend. If it were a downtrend, I'll click and change it to sell. Levels appear, and basically for pound yen, euro yen, pound dollar, level 4, 5, and 6, between 4 and 5 and 5 and 6 is where you have the most momentum and where you can expect the biggest push. On everything else, those currency pairs are less volatile. So there expect the biggest momentum between level 3 and 5, 3 and 4, and 4 and 5. So what are these levels? The base level, the level 0 is here. This is level 1, level 2, level 3, 4, and 5. They all correspond to Fibonacci sequence levels. The levels on the hourly chart and 4-hour chart are different than on the 15. Why? Because obviously on the 15-minute chart, things move less far than on the hour and 4-hour. So that's why. So you can see that, as I said, on the pound yen, typically between 4 and 5 and 5 and 6 is the biggest movements. Even between 3 and 4, even on the pound yen. So you can see that, and the funny thing is with the pound yen, there's only one candle that basically went through all 3 levels in one shot. This is typical for pound yen because it moves so much that it just breaks through 3 levels in one shot, right? That's why typically I say between 4 and 5 and 5 and 6 because it's quite a big mover. So with the euro dollar, you will not see that, for instance, or the Aussie. That doesn't happen, right? It typically will take some time before the 3rd level is broken. In this case, you see a strong candle close near the high, engulfing twins. So pretty high chance that we'll get a follow through. And indeed, you see that this space moves into, and then this space almost immediately within a few candles. You get some kind of correction here, but then the gap and a continuation up to the 6th level. So it indicates space. It's good for exits and targets, basically. At this moment, on the 4-hour chart, let's take a quick look at the daily. Breakout of this this correction could indicate that price is making at the minimum a zigzag. 50 pip bounce, as you see, minus 272 target at 155 could be the main thing to look for. And price has broken above this resistance. So strong momentum. So it looks bullish to me. There is some slight divergence on the hourly chart, but that does not have to hinder the pound yen. So daily 4-hour all look bullish. The question is, what is the best entry at this moment? If someone is not in that already, if you're in that already, then it could be good to look at 142.25 as a target, but maybe even 146 to be honest. If you're not in that already, I think it could be good to keep an eye on this daily chart. This was a bearish candle yesterday, and it's at the Keltner and the R1. So I would probably not look for a trade right now. I would probably wait for engulfing twins like this, look for a bit of retracement back to the R1, and try to shop around halfway for a continuation. Now, just because this is level 4, 5, 6. Just because it has reached 6 doesn't mean it's over. Especially with these bigger moves, especially because of the momentum here, it could even go to 7. Pound yen, euro yen, pound dollar, they have that ability to do that. But be aware that this particular zone will be a bit choppier, so it will move slower. This was a very, very strong push, as you can see. So what will happen is the momentum will die down. So I would expect some kind of channel like this to reach the 7th level. All right, folks. Well, we're reaching the end of the webinar. If you have any currency pair in mind, feel free to let me know still. Otherwise, I'm going to show you quickly what webinars we have left this week. We got expert opinion with Nenet. That's tomorrow. We have entry tactics within the market structure. And next week, we have, of course, more webinars with Nenet and the education webinar on Thursday with myself next week. And the week after, I don't have live trading webinars, but in May, I'll be back with similar webinars. So hope to see you in those as well. But I'll talk to you tomorrow in the meantime as I discuss entry tactics within market structure. So I'll be looking at market structure, but also talking about what kind of methods one can use to basically understand the entries. Sorry, what kind of methods can we use within the market structure? So when we look at the market structure is one thing, but what kind of tactics can we apply to actually finding entries? The odd yen, we can do that. Euro pound also, by the way, nicely moved up on that news. Let's take a look at the odd yen. That will be our last one then today. Here we go. All right, folks. Sorry about that. It is a bit slow at the moment. Anyhow, let's take a look at this daily chart. So we see that this is the same structure, the gap plus the bearish day yesterday. All the or many of these yens have it. Price is above the R1. All right, 4-hour chart. And 1-hour chart. I think honestly, roughly, it's the same as what the pound yen is we've seen and the dollar yen. It also depends on what the dollar yen will do. If the dollar yen will break above the resistance, then I would expect this Aussie yen to continue upwards as well. So I would say I would deflect this question a bit on back to the dollar yen. But generally speaking, it could be good to take a look at the Aussie too to compare basically what is happening with the Aussie and the dollar, and the yen, excuse me. So here's the Aussie, and the Aussie is going more or less flat and sideways. Quite a large correction, but it is above the pivot point, so seems slightly bullish compared to the dollar. Let's take a look at the odd yen again. There we go. So I think it's probably going to be a question of this daily chart. I would probably, again here too, want to see a bullish daily candle. I mean, it did break above this. It was a gap that broke it, but ultimately this is still, I would consider momentum. So at this moment, I think it's kind of like a consolidation box. Here it's about halfway. Maybe at the R1 would have been interesting for looking for a long. Now it's too late because price moved away from that already. So right here it's slamming into resistance. I don't think that this is a good spot. But if tomorrow it shows good momentum continuation and then again a bull flag correction, it might change things and that could be a bit more interesting, especially if the dollar yen moves too. So I think, sorry, it's not really such an interesting answer perhaps, but this is what I'm probably would be waiting for. And Ibrahim is saying that the euro yen has a similar structure. Yeah, and indeed those gaps, they make it a bit more difficult indeed. I mean, I don't necessarily have to have gaps closed because those gaps could be closed later on. But it is at resistance, and here too, and the dollar yen. So that does make it a bit tricky. All right, folks. Well, thanks so much for joining, and talk to you Thursday. Hope that you'll check out Admiral Markets Supreme Edition. Among other things, those cool indicators, Keltner pivot points, plus very useful tools like the mini terminal, as I said. And wish you great trading. Talk to you soon. Cheers.